ExamPrep.School. Montana Crop Insurance Exam, exam code INSMT- Crop31 or OPMT-Crop31. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Crop insurance. General insurance terms and concepts. Montana statutes and rules pertinent to all adjusters. Multiple peril insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In insurance terminology, the term risk most accurately refers to A. The uncertainty of loss or chance that a loss will occur. B. The measure of potential severity of a claim. C. A specific hazard or condition that may cause loss. D. An insurer's assessment of financial stability. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is that risk in insurance refers to the uncertainty of loss or the chance that a loss will occur, distinguishing it from hazards or severity measures. Reason B is not correct. This distractor confuses risk with loss severity rather than the uncertainty about its occurrence. Reason C is not correct. This distractor describes a hazard, which is a condition that increases the chance of loss, not the risk itself. Reason D is not correct. This distractor refers to insurer solvency, which is unrelated to the insurance definition of risk. Question 2. Speculative risk differs from pure risk in that speculative risk A. Allows for the possibility of gain as well as loss. B. Involves only the chance of loss without any possibility of gain, as a C. Is always insurable by standard policies. D. Pertains solely to accidental events. The correct answer is A. The correct answer is that speculative risk involves both the possibility of gain and loss, whereas pure risk involves only the possibility of loss or no loss. Reason B is not correct. This distractor describes pure risk rather than speculative risk. Reason C is not correct. This distractor incorrectly asserts insurability as a defining feature rather than the risk outcome possibilities. Reason D is not correct. This distractor confuses risk type with the nature of the event, while speculative risk is defined by outcome potential. Question 3. Within insurance contexts, a hazard is best defined as A. A condition or situation that increases the frequency or severity of a loss. B. The actual event or cause of loss. C. The statistical distribution of insured losses. D. The limit of liability under a policy. The correct answer is A. The correct answer is that a hazard is a condition or situation that increases the likelihood or severity of a loss, distinguishing it from the event, peril, or policy terms. Reason B is not correct. This distractor describes a peril, which is the cause of loss rather than a hazard. Reason C is not correct. This distractor refers to actuarial concepts, not the definition of a hazard. Reason D is not correct. This distractor relates to policy structure rather than a condition that influences loss. Question 4. Which of the following is an example of a physical hazard in claims handling? A. Frayed electrical wiring in a building. B. Inflated damage estimates by a claimant. C. Intentional concealment of loss facts by an insured. D. Location in a high-crime neighborhood. The correct answer is A. The correct answer is frayed electrical wiring, which is a physical condition that increases the chance or severity of loss, fitting the definition of a physical hazard. Reason B is not correct. This distractor represents a moral hazard involving dishonest claim reporting, not a physical condition. Reason C is not correct. This distractor involves deliberate concealment, a moral rather than physical hazard. Reason D is not correct. This distractor is an external or location-based exposure, not a physical hazard inherent to the property. Question 5. Which scenario exemplifies a moral hazard in the underwriting process? A. An applicant deliberately providing false information on an insurance application. B. An applicant living in a region prone to flooding. C. The insurer using loss history to set premium rates. D. A high deductible chosen to reduce premium payments. The correct answer is A. The correct answer is deliberate falsification of information, which reflects dishonest behavior that increases the likelihood of adverse outcomes, characteristic of a moral hazard. Reason B is not correct. This distractor describes a risk exposure, not dishonest conduct by the insured. Reason C is not correct. This distractor outlines an underwriting practice rather than insured behavior. Reason D is not correct. This distractor involves policy design choices, not insured dishonesty. Question 6. After obtaining a comprehensive crop insurance policy, a farmer becomes less diligent with pest control and field inspections, believing that any resulting damage will be covered. This change in behavior best illustrates which type of hazard? A. Physical hazard. B. Peril. C. Moral hazard. D. Moral hazard. The correct answer is D. The correct answer is the one describing an insured's indifference to loss control after coverage is in place. This fits the concept of a moral hazard, where carelessness or complacency increases the likelihood or severity of a loss. Reason A is not correct. This option is incorrect because it refers to a physical condition that increases loss potential, not a behavioral change. Reason B is not correct. This option is incorrect because it denotes the cause of a loss event, not a change in the insured's behavior. Reason C is not correct. This option is incorrect because it involves intentional or fraudulent acts to gain coverage benefits, rather than mere carelessness. Question 7. In a standard homeowner's policy structure, which section immediately following the definitions sets forth the insurer's binding promise to indemnify and delineates covered causes of loss, limits, and the insured property? A. Declaration section. B. Insuring agreement. C. Conditions section. D. Exclusion section. The correct answer is B. The insuring agreement contains the insurer's promise to pay, describes covered perils, policy limits, and property to which coverage applies. Reason A is not correct. The declarations section lists basic policy data like names, addresses, and terms, but does not define the insurer's indemnity promise. Reason C is not correct. The conditions section outlines duties and procedures after a loss rather than stating coverage promises. Reason D is not correct. The exclusion section removes specific perils or property exposures from coverage instead of detailing the insurer's undertakings. Question 8. Regarding a typical property insurance policy, which of the following pieces of information would least likely appear on the declarations page? A. Named insured's legal name and mailing address. B. Effective and expiration dates of coverage. C. A complete itemization of all covered perils. D. Total policy premium and any applicable deductibles. The correct answer is C. The declarations page provides basic policy facts and premium details, but does not list detailed covered perils, which appear in the insuring agreement. Reason A is not correct. Named insured information appears on the declarations page to identify who is covered. Reason B is not correct. Coverage dates are standard declarations elements showing policy period. Reason D is not correct. Premium amounts and deductibles appear on declarations to inform the insured of costs. Question 9. Within an insurance contract, the conditions section primarily serves to A. Detail the perils covered and applicable policy limits. B. Outline duties of parties regarding claims procedures and notification timeframes. C. List specific property types that are excluded from coverage. D. Schedule the policy term and premium payment dates. The correct answer is B. The conditions section specifies obligations like prompt notice, proof of loss, and cooperation requirements after a loss event. Reason A is not correct. Covered perils and limits are described in the insuring agreement, not in conditions. Reason C is not correct. Exclusions list items not covered. It is a separate policy section. Reason D is not correct. Policy term and premium due dates are shown on the declarations page, not in conditions. Question 10. Which of the following best describes the function of the exclusion section in an insurance policy? A. Detail the insurer's indemnification obligations. B. Serve as the contract's definitions glossary. C. Enumerate requirements for establishing insurable interest. D. Carve out coverage for specified perils or property exposures to limit insurer liability. The correct answer is D. Exclusions remove coverage for certain risks or exposures, narrowing the scope of protection provided by the policy. Reason A is not correct. Indemnification obligations are outlined in the insuring agreement, not in the exclusion section. Reason B is not correct. Definitions appear in their own section to explain policy terms, not in exclusions. Reason C is not correct. Insurable interest requirements are typically part of general conditions or specific provisions, not exclusions. Question 11. On January 1st, an insurer issues a homeowner's policy with a $200,000 dwelling coverage limit. On March 5th, the insured requests an endorsement to increase the dwelling limit to $250,000, specifying an effective date of March 1st. The insurer mails the signed endorsement on March 5th, but the insured has not yet returned it when, on March 8th, a fire causes damage. Which coverage limit applies to the loss? A. $200,000 because the insurer's approval and insured's agreement were not finalized until after the fire. B. $200,000 since no endorsement can apply to a loss that occurs before the effective date requested. C. $250,000 because the endorsement's effective date governs coverage even without the insured's signed acceptance prior to loss. D. Only the additional $50,000 because the new limit applies only to subsequent losses. The correct answer is C. The endorsement specified a March 1st effective date, so it modifies the contract as of that date regardless of when the insured returns the document. Reason A is not correct. The timing of the insured's return does not override the endorsement's stated effective date. Reason B is not correct. Endorsements can have retroactive effect when the effective date is expressly specified and agreed by both parties. Reason D is not correct. Endorsements replace the entire coverage limit rather than applying only to subsequent losses. Question 12. In insurance jurisprudence, negligence is most accurately defined as the failure to exercise which of the following? A. The intentional infliction of harm with willful disregard for others' safety. B. Liability imposed without proof of fault when engaging in inherently dangerous activities. C. Performance of duties contrary to those specified in a contractual agreement. D. The degree of care that a reasonably prudent person would exercise under similar circumstances. The correct answer is D. The correct answer defines negligence as the failure to exercise reasonable care under similar circumstances, distinguishing it from intentional acts, strict liability, and contractual breaches. Reason A is not correct. This describes an intentional wrongful act rather than an unintentional failure to exercise care. Reason B is not correct. Strict liability applies regardless of fault and is not based on failure to exercise reasonable care. Reason C is not correct. A contractual breach concerns failure to meet contractual terms, not tortious negligence. Question 13. Which of the following combinations correctly identifies the four essential elements that must be established to prove negligence in a liability claim? A. Duty, breach, causation, damages. B. Duty, breach, proximate cause, indemnity. C. Duty, intent, causation, damages. D. Breach, causation, remoteness, contributory negligence. The correct answer is A. The correct answer lists duty, breach, causation, and damages as the classic elements of negligence, whereas the other options include terms not required or mixed doctrines and remedies improperly. Reason B is not correct. Indemnity is a remedy, and proximate cause is part of causation, not a separate foundational element. Reason C is not correct. Intent is not required for negligence, which is by definition unintentional. Reason D is not correct. Remoteness and contributory negligence are doctrines affecting liability, not basic elements. Question 14. In insurance loss analysis, proximate cause is best described as which of the following? A. The immediate observable event that results in damage regardless of its causal efficacy. B. The dominant efficient cause that in a natural and continuous sequence sets in motion events producing the loss. C. A remote or incidental factor that contributes minimally to the occurrence of loss. D. An intervening offense that supersedes the insured peril as the primary cause of damage. The correct answer is B. The correct answer captures that proximate cause is the primary efficient cause initiating and materially contributing to loss in an unbroken causal chain, differentiating it from mere effects or remote factors. Reason A is not correct. This describes a visible or immediate cause but lacks the efficient causal chain requirement. Reason C is not correct. A remote cause is the opposite concept, having minimal impact on the loss occurrence. Reason D is not correct. An intervening cause, if it supersedes, breaks the chain, and is not considered the proximate cause. Question 15. Under the federal crop insurance program, which of the following conditions must be met for a crop to be eligible for insurance? A. It must be listed in the approved actuarial documents for its county by the Risk Management Agency. B. It must be planted using seed certified by the National Seed Association. C. It must have achieved a minimum yield per acre over the previous 5 years. D. It must be sold under a forward contract before planting begins. The correct answer is A. The correct answer is that a crop must appear in the RMA-approved actuarial documents for its county, which defines its insurability under federal crop insurance. Reason B is not correct. This is wrong because certification by an external seed association is not required under federal crop insurance eligibility rules. Reason C is not correct. This is wrong because historical yield performance is not a criterion for determining crop eligibility. Reason D is not correct. This is wrong because entering a forward contract before planting is not an eligibility condition for crop insurance. Question 16. Under the federal crop insurance program, which statement best distinguishes producer eligibility from crop eligibility? A. Producer eligibility involves compliance with conservation plans, while crop eligibility requires receipt of premium subsidies. B. Producer eligibility depends on the producer's gross income, while crop eligibility is based on the method of harvest. C. Producer eligibility is established by the planting date, while crop eligibility is defined by the yield guarantee. D. Producer eligibility requires sharing in the production risk, whereas crop eligibility requires being an RMA-approved type in the insured county. The correct answer is D. The correct answer is that producer eligibility centers on the individual's share in production risk, whereas crop eligibility is determined by whether the crop type is approved by RMA in that county. Reason A is not correct. This is wrong because conservation compliance and subsidy receipt are not the primary criteria distinguishing producer from crop eligibility. Reason B is not correct. This is wrong because eligibility is not tied to a producer's income or a crop's harvest method. Reason C is not correct. This is wrong because planting dates and yield guarantees are coverage details, not eligibility distinctions. Question 17. A corn grower chooses a coverage level of 50% instead of 75% for MPCI buy-up insurance. What effect will this choice have on the insured yield guarantee and premium cost? A. The yield guarantee increases and the premium cost increases. B. The yield guarantee decreases and the premium cost decreases. C. The yield guarantee decreases and the premium cost increases. D. The yield guarantee increases and the premium cost decreases. The correct answer is B. The correct answer is that selecting a lower coverage level reduces both the yield guarantee and the premium cost because the insurer's liability decreases with lower percentage coverage. Reason A is not correct. This reverses the relationship, implying higher coverage with lower guarantee and cost, which contradicts coverage level mechanics. Reason C is not correct. Decrease in guarantee paired with increased cost misstates the impact of lower coverage levels. Reason D is not correct. Increase in guarantee with decrease in premium misrepresents the effects of selecting a lower coverage level. Question 18. A soybean farmer has an approved yield of 50 bushels per acre and a price selection of $10 per bushel. After drought reduces actual yield to 30 bushels acre, how much indemnity does the farmer receive under CAT coverage only? And how much would be received at a 65% buy-up coverage level? A. No indemnity under CAT, $50 per acre under buy-up coverage. B. $50 per acre under CAT, $25 per acre under buy-up coverage. C. No indemnity under CAT, $25 per acre under buy-up coverage. D. Indemnity of $25 per acre under both CAT and buy-up coverage. The correct answer is C. The correct answer is that CAT covers losses only below 50% of approved yield, so actual yield above that threshold yields no payment, while buy-up at 65% coverage triggers payment on the 2.5 bushels acre loss, 30 undefined minus 30, producing $25 per acre indemnity at $10 per bushel. Reason A is not correct. This miscalculates the buy-up payment by using the full 50% CAT loss rather than the 65% threshold. Reason B is not correct. This overstates the CAT indemnity by applying a payment where the actual yield exceeds the CAT threshold. Reason D is not correct. This suggests that CAT would pay on a loss when actual yield exceeds the 50% guarantee, which is incorrect. Question 19. A farmer grows barley on two non-contiguous fields, 60 acres on tract A and 40 acres on tract B. If optional units are elected, how many insurable units are created and how would this differ under basic units? A. Optional units, 1 combined unit. Basic units, 2 units by tract. B. Optional units, 2, 60 AC and 40 AC. Basic units, 1 unit combining both tracts. C. Optional units, 4 units for ownership and section. Basic units, 2 units by tract. D. Optional units, 1 unit per county. Basic units, 1 unit per field. The correct answer is B. The correct answer is that optional units allow separate units by tract or ownership, resulting in 2 units, whereas basic units combine all acreage of the same crop within a county into 1 unit. Reason A is not correct. This inverts unit definitions. assigning 1 unit to optional and 2 to basic, which contradicts policy rules. Reason C is not correct. This adds unrelated subdivision criteria and misapplies the concept of ownership in sections. Reason D is not correct. This misrepresents unit rules, as neither basic nor optional units are defined by county alone in this way. Question 20. In federal crop insurance, the policy rate is best defined as the A. Percentage of the premium covered by the government. B. Rate per unit of production used to calculate gross premium before subsidies and adjustments. C. Maximum indemnity amount paid per unit of coverage. D. Discounted interest rate applied to deferred premium payments. The correct answer is B. The policy rate is the per unit rating factor applied to the insured production or acreage to compute the gross premium before subsidies and adjustments. Reason A is not correct. The government subsidy percentage is a separate concept from the policy rate calculation. Reason C is not correct. This describes a limit on indemnity payment, not the policy rate. Reason D is not correct. This refers to deferred premium interest, not the policy rate used to calculate premium. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.